we go back to cash flow. Consolidated statement of cash flow. Obia uses a different approach, right? Everybody uses different approach. But my approach is be vetted and approved by the FDA. Standard board, so my almost certificate, maybe. So if you are dealing with an asset, cash flows related to an asset or a liability, okay? Are you following? Take the opening balance, the balance brought forward, mostly if there's non-current plus current, right? You take it, okay? Balance brought forward means for the previous year. Are you all following? Are you all following? You need to write this down. Are you following?
Yes, bro.
Then anything that will add or reduce that account, so additions or disposals to that account, okay, that means not addition. I shouldn't use the word additions and disposals. I should use increases or decreases, okay? So additions or disposals to that account, or simply increases and decreases to that account, right? So anything that increases the account or decreases that account, right? We are going to add or deduct. Then this is what it should have been, okay? Then I compare it to the closing balance, the one at this year. So if there are two, non-current plus current, I add the two up and then I compare it because this is what it should be. It should have been this. Okay, it should have been this, but it became this. So the difference becomes the cash received or paid. Are we okay? Good. Are we there? Put this down. Then when it comes to cash flow related to incomes and expenses, so this one is cash flows associated with assets and liabilities. Okay? So let's come to cash flows related to income and expenses. Cash flows related to what? To income and expenses. The same way, you take the income or expense account. Okay? You know why I don't like to use T account for cash flow? Because under pressure, an expense may be a particular account might be a liability, right? But you are going to get the amount correct, but the side you will get will be wrong. So somebody sees depreciation, right? Then you go and say balance brought forward here, okay? Say 20,000. Let's say what do we have it? Maybe P&L, okay? 10,000. Won't you will still get a 30,000. Somebody said, oh, but depreciation is an expense. Yes, but then it is accumulated. It's a liability. It's a contra asset account. It should be at this side. But you see, you still got a 30,000, which should have been here. You still get the figure correct, but the side is wrong. So this error of original entry. Does it make sense? Do you see why I don't use the T account? If you are not very smart and under pressure, you will go and treat something on the wrong side. You get the figure correct on the cash flow, but the side is wrong. So they'll mark you wrong. Are you getting me? Are you getting me? Are you getting what I'm saying? Hello?
Prof. Prof, yes,
What I'm
yes,
saying?
yes, yes,
I'm
yes.
saying that if you use T account, mostly you may post on the wrong side, but you get the answer correct. But so far as it's on the wrong side, you will be marked wrong. You see, if your double entry is not strong, don't try T account. Use statement form and go straight, right? So when it comes to income or expense, receivable or payable, take the opening balance, right? On the balance sheet, basically for the previous year, right? So opening balance is always the previous year. So let's say 2014, 2013, you take that one, right? Then add any word, increases or what? Or decreases, especially if there's a P&L figure, add it up, right? Then it should have been this. But you compare it to the closing balance, the one at the end of the year, And the difference gives you what? Your cash received or paid for that particular what? Asset or that particular income or expense. So this is how you do this, right? Just put this down. We'll take illustrations and then we'll put it into a full question. You say, anti cash flow, and you just need the right approach. I always tell you. So please put this down and let's take some simple questions. As you are writing, I'll also be putting something down. So this is a mini P&L. Okay, so we have what do we have? Okay, let's say we have gross profit. We have gross profit, 100,000. Then we have operating expenses. Operating expenses, 20,000. We have finance cost. We have 30,000. We have interest income. We have 40,000. We have profit after tax.
Prof, let's start and copy the one that you are writing.
Yes. So just some sample P&L. So profit after tax, Ebenya saying 100 minus 90, right? So we have 10,000. Share of associate profit after tax. Let's see, this is 30,000. Okay, so this is what we have. So total profit after tax, we have 40,000, right? Okay, so with this being said, we have attributable to owners of the parent, 38,000, and then NCI, 2,000. Okay, so there's a sample P&L. Then let's go to the extract of the balance sheet. I want to show you something. So under assets, okay, under assets, let's say we have 20x4 and 20x3. Okay, so we have PPE. Okay, we have PPE 100,000 and 80,000. Okay, so and we have investment income or investment in associate 120,000, 140,000. Okay, then we had what? Interest receivable. Interest receivable 20,000 and 50,000. Okay, so this is what we have. Then we have about goodwill. Goodwill 115,000. Then 110,000. Yeah. Okay, then under liabilities, this is what we have. So we have, hey, I forgot one thing. Oh, please let's slot it in. I forgot one thing. So the finance cost that we have here for 30,000, right? This interest income, split it, make it 25,000. Okay, are you following? I said make it what? I said make it what?
25,000.
And bring tax 15,000. Are you following? Because we forgot tax. So liabilities Let's say we have income tax payable or current tax payable. Okay. So liabilities here or current tax payable here, 20,000, 18,000. Okay. Then we had deferred tax, 18,500, 24,000. Okay. So this is what we are seeing. So let me just bring maybe possibly receivables. The one that I'm testing. So receivables, current tax, deferred tax, I've put it there. Then I have what? Interest payable, 12,500. And then what? 2,000, or let's say 12,900. Okay, so this is what we have. Okay, let's just say this is let's say this is all we have on the face of the account. Yes. They say we should what? We should prepare extracts from the okay, interest payable. I forgot equity, right? I forgot equity. So we have share capital. Share capital, 100,000, 80,000. So we have retained earnings. We have retained earnings, 180,000, 100,000. Okay. Then we have our good friend non-controlling interest. Please don't mind me. It wouldn't. It's supposed to balance, but don't mind me. Even if it doesn't balance, don't worry. Okay. It's just an illustration. But equally, we can make it balance by adding everything up. So add all this up and subtract the liabilities that we have here. What do we have? So that we balance it off, Preco. So that it will be a balanced balance sheet. What do we get? And now, dear, don't worry. I'm found. So NCI, let's just put here 85,000. Let's put here 125,000. Okay. So for me, these are you putting it down? So these are just extracts. It means that it's not full, like it shouldn't balance. Then I didn't bring inventory payable. I didn't bring any of them. But this is what I just want you to put down with the P&L that we have here. Have you put it down?
Okay, scroll go up small. The equity. Hello, Prof.
Is that I should go down small? I want to get.
No, up. The equity. The equity, not sure. If we go up small.
Are you okay now?
Yes, please.
Are you done?
Almost.
Please, everyone should write too, because you are the ones going to dictate for me. And I'll show you how to crack cash flow. Simple. Crack. Cash flow is the easiest topic. What did I say?
It's the easiest topic.
So this one is not fala. This one is falala.
It's
That one was fala, but this one is falala.
should have chatted last sitting. Cash flow have booming correct.
But cash flow, crown a fool. Cash flow. You can get me cash flow. My student always gets 2020. Cash flow. A for papa. Don't worry. After we are. You full question. Crown more put numbers of it. Prof, what my then what life must be simple. I look at them. I say, they are making noise. And you're doing. But you must practice. I mean, all these things I'm teaching you, if you don't put pen on paper, then you are joking. It won't work. There's no magic unless you work. Do you understand? So, Pamuchom, where we? Pamuchom.
Oh, Facha cast here equity ne kakra bi.
Okay. Oh, all of you will qualify you. Me who be shene that?
Amen.
Amen.
Come and give me my cocoa money and advertise.
Papa.
Because now we'll be doing face to face for especially the controller staff, the old people who want to chatter now. Ma chatter, on chatter no. Bring them. Maybe more time I'm paying for pa. They have been my key audience. Because my older student went on retirement before she chatted. I took time.
Oh, that's all then your work go.
But I encourage her so on chatter at least. Or chatter. Most of them too. That's what gave me patience. One woman.
Yeah, boss.
Papa,
Yes, sir.
Papa, board, so.
Yes, sir, Chief.
Yes.
Prof, we probably you class a for a while.
No problem. No, sir.
Prof, what's it probably you know what sounds small issue be why. With a for a while.
No problem.
For now, bonkum.
No problem. I did for you.
You boss. Thank you.
You're welcome. But I hope you are not having any problems learning. Or it's now that we have to resolve the issue, eh?
That is why that's why I'm saying I'll call you in.
All right. These are we all done? Are we all done?
Yes, sir.
Yes, please.
Yes, please. Okay. Yes, no, it may be so. Okay. So now we have written this down, Meboa. We have also written this down, Meboa. Me, my approach is a back cash flow. I forget working here. You see every account on the face of the account.
Yes, sir.
Open accounts for them as your workings. What did I say?
Open account for line item.
That is all. On the face of the account, what did we see? The first thing on the balance sheet was what? PPP. Pre-papa preco. But we are pre-papa emfa. By befa. So PPE, what was the opening balance for the previous year? That's the opening balance for this year, right? How much?
80,000.
It was 80,000, right? Then I come somewhere down here. Balance carry forward for PPE was what? So I want you to add some small notes to the question we wrote, right? So down here, right? Included in operating expenses, right? Included in operating expenses was depreciation. Okay. Was depreciation of. Are you right? How much was operating expenses? 20,000, right? So was depreciation of 5,000, okay? And loss on disposal of PPE, loss of disposal on PPE, okay? Of 8,000, okay? So this is what I want you to add. Are we okay? So this is the footnote. Have you added it? So now we are just going to work with what I told you before we actually dive into the cash flow. So balance brought forward. What's the balance carry forward for PPE? Quick.
80,000.
It's 100,000.
100,000.
So this one is X3. That's what you take the previous year, and this one is the current year. Do you understand?
That's 4.
100,000.
100,000. No,
100,000.
this is the year. So you know that one was 20x3, this 20x4. Okay. So the next thing on the account was what? After
Nothing.
PPA.
It's a investment in associates.
Okay, so investment in associate, right? So in that case, balance brought forward now you're saying
Balance brought forward. So it was 120,000.
120.
120.
120,000.
Balance carry forward, you're saying
Well, 140,000.
140,000. Good. Okay. Working number 3. What did we have?
But it's just a goodwill.
Goodwill.
Interest received.
Okay, it was rather interest received. Okay, so
Okay.
interest
Interest received.
received or interest receivable. Balance brought forward now you're saying
50,000.
50,000.
50,000.
Balance carry forward now you're saying
So it was 20,000.
20,000.
okay. Next working number 4.
Goodwill.
Goodwill. It doesn't mean you should do your workings in this straight manner. You can do some maybe 2-2, right? So goodwill. Balance brought forward now you're saying
115.
115. Then balance carry forward. Goodwill became what?
110.
110. Okay. Working number 5. What followed?
Current tax.
Current tax. But we cannot open tax. We can just say tax payable. Do you get?
Tax.
Because
Yeah.
tax and deferred tax all go to the tax account. Though you can open them separately, but because on the P&L, the tax are combined. You know, P&L tax is made up of both current and deferred. So you just open tax payable, then you say balance brought forward, right? Then you add the current and the non-current. Into current tax, no opening balance, you're saying
It's 20,000.
20,000.
and deferred tax. You see, I told you you must add current. Then deferred tax, so not balance, opening balance, you're saying that's the non-current.
And this is
18,500.
18,500.
18,500.
Okay, so together, that means there will be how much? 38.
So it was 38,500.
38,500.
The closing balance, no. That one too will take the current brought forward and the non-current brought forward. You get the style?
Yes,
Yeah.
please.
Okay. So what do we have?
We have 18,000 and 24,000.
18,000.
No, you mean the deferred tax went up?
Yes.
Okay, it went up. Yeah. So plus 24,000. And that's how much?
Yes, that's
42,000.
42,000.
42,000. Okay.
Yes.
Okay. Then working number 6. What follows?
Number 6.
After deferred tax, after tax.
Interest payable.
Okay, interest payable, right?
Yes.
Opening balance, you're saying
12,500.
12,500. Okay, then what follows? Balance carry forward. The closing balance
12,900.
12,900. Okay, then the next one was what?
Stated capital.
Stated capital. Now you're saying
80,000.
balance brought forward. Now 80,000. Okay. Balance carry forward. Now you're saying
100,000.
100,000. Okay. The next account.
Retained earnings.
Retained earnings. Wait, but prof, where the endorsement? Now, time you bet me and say, but wait and look at the salvation. Maybe we are quite intense and no quite, you will finish earlier than everybody. It's a strategy. See. So what's the opening retained earnings?
18,619,000.
Then
186.
186,000.
Uh,
Okay, then Closing here saying
100,000.
100,000. Okay. Then what follows?
Non-controlling
That's the last one,
interest.
right?
Yes, sir.
Non-controlling what? Interest. Balance brought forward, you're saying
125,000.
5,000. Balance carry forward, you're saying
85,000.
25,000. Now, you see, we've done all the balance sheet account. Now, anything that has its corresponding brother in the P&L, you give me the P&L, right? Now, investment in associate. Do we have anything concerning the associate in the P&L account? Watch the P&L account. Is there anything concerned with associate in the P&L account?
Yes.
What is it? Share of associate profit. Maybe
Sales associates profits.
then we come and add it up. So balance profit, add P&L figure. How much is that?
30,000.
30,000. Okay. Is there anything concerning interest income or investment income in the P&L?
Interest income.
It was in the P&L, right?
Yes, sir.
So P&L, how much was it?
25,000.
25,000. Good. Was there anything concerning goodwill in the P&L account?
No.
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 Was there anything concerning tax in the P&L account?
Yes, sir.
Yes.
How much? 15,000, right?
15,000.
Thank you. Was there anything concerning finance costs in the P&L account?
Yes,
Finance
sir.
cost, yes.
So P&L, how much?
30,000.
30,000.
Okay. Is there
No,
not
it's-
the finance cost that we
says-
split?
says- no, it says 30,000. No.
It was the finance cost that we split to, Anna.
No, the
it's-
interest
the
income.
interest income.
So finance cost was 30,000. Yeah.
Yes, sir.
So this one, 30,000. Yeah. Then was there anything concerning stated capital? No. Was there anything
No.
concerning retained earnings on the P&L account? Profit after tax attributable to this attributable
Yes, sir.
to where does it go? This one doesn't it go to retained earnings?
Retain earnings, sir.
And this one also goes into the NCI account. Meboa.
Yes.
What the subsidiary makes, parent and NCI must share. No, be so. Do we have those
Yes, sir.
accounts in our books? Yes, retained earnings. The P&L figure was what? How much went there? 38,000. Meboa.
Yes, sir.
And how much went to NCI?
20,000.
20,000.
Thank you. So now we go to our footnote. Was there anything in the footnote? Was there anything in the footnotes that we need? They said what? Included in operating expenses are depreciation of what?
5,000.
5,000.
5,000.
And then loss on disposal of PPE of what?
8,000.
8,000.
8,000. Okay. So we know that when we come to the PPE account, a loss on disposal does not affect our PPE, right? Does it? We only show it in the P&L. But loss on disposal does not affect our PPE. But depreciation reduces our PPE account. True or false? You see,
True.
I told you that if there are anything that increases or decreases, you must bring it into account. Do you remember? Depreciation, does it reduce the account or it increases it?
It reduces.
It reduces, right? So that's 5,000. Was there any other adjustment in the whole question?
No, sir.
No, sir. Thank you. So we close everything up. So PPE was 80,000. Depreciation reduced it by 5,000. That means PPE should have been 75,000. Meboa. But PPE became 100. So at there 75, 100. Utobi ana utombi.
It's Otobi.
Utobi. That means there are additions to PPE.
Yes.
Does it make sense?
Yes, sir.
Is there cash outflow or cash inflow?
Cash out.
Cash outflow. Thank you. So additions to PPE, cash outflow by how much? 25,000. What kind of activity is this? Buying and selling of assets is investment. Meboa. So this is an investing activity. Make sense?
Yes, sir.
Thank you. Now, associate. Associate, our balance was 120. We added 30. Should have been 150,000. Meboa. But associate dropped to 140. What happened? Anytime there's a drop in the associate account, it means that what? We receive dividends from what? The associate. So how much dividend did we receive from the associate? 10,000.
10,000.
Now, because we invest in the associate to get these dividends, what is it? An investing what? Activity. You take it there. Makes sense.
Yes, sir.
Interest receivable. The bank was owing us 50,000. Then we invested more, so they should have given us this amount, right? So overall, they should have owed us 75. By the end of the day, reduced to 20. Did they pay us some money? Did they pay us some money? Somebody owing us 75. Now he owes us 20. Did he pay us something?
Yes.
Yes.
How much did he pay?
50,000.
55.
55.
55, sorry, 55.
And this is as a result of interest from investment. So what type of activity is this? Investing activity.
Invest.
Goodwill was 115. Did the question say we bought any new subsidiary?
No.
No.
And goodwill only reduces by our good friend called what?
Impairment.
Impairment.
One, the 5,000 was due to what? Impairment loss. We all know this, right? From class 1. Okay, so tax payable. Let's close this account off. They were owing us 38,500, or we were owing 38,500. Then the P&L, the tax for the P&L for the period was 15. So they should have given us what? Our liability should have become what?
It's a 53.
53,500.
But it reduced to 42. Did we pay some?
Yes.
Yes.
So tax paid. How much did we pay?
What's the difference?
Then 8,500.
That means we paid off 8,500, right? Good. Now, interest payable. We're supposed to owe the bank what? 42,500. But it reduced to 12,900. Did we pay some?
Yes.
Interest.
11,500. Prof,
Eh?
the tax payable is 11,500.
Well, you are the same person who gave me the 8,500.
SDK.
So this one, did we pay some? Did we pay some? We were owing the bank 42,500. Now we owe them 12,900. Yetuabia na yentuabia.
Yetuabi.
I need.
Yeah,
29,600.
How much?
29,600.
Confirm.
Confirmed. Isaac is through.
Oh, they said the music calculator. First, now I do not know.
You.
Nobody neighbor. So 29 what?
29,600.
29,600. Okay. So this is what we paid, right? Operating activity. Okay. Then stated capital. We had shares of 80 and it grew to 100. Were there any other things in between? No. That means we issued new shares, right? True or false?
Yes.
Anytime
True.
shares increase, we issue. Issue of shares, is it cash in or cash out?
Cash in.
Yes. Cash in.
Thank you. And when you issue shares, what kind of activity is that? Is it investing, financing, or operating?
Financing.
Financing it.
Cashing. So financing of additional 20,000. Good. Now, retained earnings used to be 186. Then profit for the year was added. So what do we get?
18,600 plus 38. 56,600.
Eh?
Hey.
So 186
No.
plus 38.
It's
Is it why it is
186.
6,000?
Yes.
Hey, I'm seeing 18,600. 224,000.
224,000. Oh. But this 224,000 is what we should have owed our shareholders. But now it has reduced to 100,000. Did it reduce? What reduces retained earnings?
Dividend.
Dividend.
Dividends paid by the parent. How much? 100 and
124.
124,000.
okay, good. Now let's come to NCI. What kind of activity is the dividends paid? Financing, investing, operating.
Operating.
Yes, it can be operating or financing, but I always put it under financing. Okay, so for
Okay.
dividend is always financing, except dividend received. This is dividend paid. Because you got finance, you are paying that cost. So I treat it as financing. But if it's received, then it's investing. Because you do an investment before you get returns, right? And then you get financing, then you pay the cost. Make sense?
Yes.
Okay, so NTI was 125. No be so. Then for the year, we gave them additional profit of 2,000. So NCI should have had 127, mebwa. But NCI reduced to 85. So what happened? Does it mean the subsidiary paid dividends to NCI? Yes. So by how much did NCI receive dividends from the subsidiary? That's the difference. That's how much?
42.
42,000.
42,000. Into cash flow, tell me, AF one heading.
Hey,
And
with this strategy, dear, one cousin. Oh,
You understand?
Prof, no idea now.
And one you, bro.
Mhm.
Bro,
they won't trick us.
I will show you all the tricks he said. But now that you've gotten this is like the whole thing. Until we can take any question and you say, oh, I did way the head do cash flow head the papa. With my approach, Charlie. People don't know this. That's why they struggle. Oh, find the back why you miss. You see, I have
Prof,
a strategy in console. I always tell you, open all the accounts and put them down. It is a strategy that works magic. I use only 1 hour, 30 minutes to do corporate reporting. And these were just my strategies. So I open me be accounting now to business valuation, all the accounts. BBI is accounts that you are dealing with. Accounting. To me, be accounting now to whole. Then when I do, I pick, I add. When I do, I pick, I add, I subtract. I do, I Obeshana pa into me, everything balance. So I balance you and balance you. I do what I'm supposed to do. Until within 1 hour, 30 minutes, 4 questions gone. Charlie.
Hey, Prof.
Yeah.
Prof, the investment in associate,
Mm-hmm.
I invested 120,000.
No, this is opening balance. That doesn't mean that's what you invest,
Hey, madam.
not from the.
Pablo.
Okay.
And then during the year, this is the
With,
share of their profit. Remember that always investment in associate, we take cost of investment and add the share of associate profits. Okay.
Yes. Mm-hmm.
Then if there's any dividend from the associate, we take it out from the account. Remember?
Yeah.
But now the dividend wasn't given, but they gave the closing balance. So if there's anything missing, it's the dividend.
Okay. Okay.
So now we are going to do extracts from the account, right? So mostly in exam, I want you to do operating activities on one page and the rest on another page, right? So cash flow from operating activities, it should be on one page because here it can be very disturbing. Okay. So usually you are going to start with what? Your profit before tax, right? Then you reverse the things that you worked on. So if I take my profit before tax, I'm just going to assume a figure. No, it was in the question. The question itself, we had profit before tax, right? How much was it? That means take all this from the 100,000. Yebenya saying, how much is the profit before tax? Before the 15, 10,000. That means 10,000 plus 15. We must get it. What do we get? 10,000 plus 15. 25, right? No, be so. You all understood how I got the 25,000. You all understood how I got the 25,000.
no,
Then
Prof.
please come again now.
100 minus 20 minus 30 minus 25. Yebenya saying
Yeah. 75, 25.
that is it. So I simply said it is this one minus this, right? So I took this 15, added back I took the 10,000 and added back the 15. So I still got back the same 25. So that's 25,000, right? So now what you do is that you are going to add back, okay, non-cash items like depreciation, amortization, those adjustments you did. Okay, so non-accounting, non-cash items, right? Because you are dealing with cash, so we take non-cash what items. So what non-cash items did we see in the question? First, we saw depreciation, right? No, be so.
Yes.
Depreciation was how much? 5,000. No, be so. Good. Then they said there was loss on disposal.
Yeah, boss.
Yes, please.
Happening. Yeah, but talking by.
So, loss on disposal in the P&L, what would I would have what? Taken it from profit, right? Would have minus it from profit. True or false?
True.
Yeah.
But because we are doing cash flow, we are reversing it. Because depreciation was also taken out of profit. Because we want to get a cash portion, we are reversing anything which is non-cash. We are adding them back. Okay, so loss on disposal was how much? 8,000. Okay, per the question. So we must
8,000.
reverse it. Okay, we must reverse whatever accounting issue we did. So we reverse it. It was 8,000. So we reverse it, right, by adding it back. Then what other non-cash item did we have per our accounts? This one was just in the footnote, right? So straight, we just picked it and reversed it. But what about our workings? There's some non-cash item we saw. What was it? Impairment. Moka said impairment is an expense, but is it real? Is impairment?
No, goodwill impairment.
Impairment is not real, right? So goodwill impairment would have been charged as an expense. It's not real. So this goodwill impairment, it must go back. Do you get it? And how much was it? 5,000, right?
5,000.
Add it back. Do you understand?
Yes.
Was there any other inventory, increase in inventory, decrease in inventory? We didn't have inventory and all that, right? So operating activities, when we add all this one, what do we get? 18,000, right?
18,000.
What do I get?
43.
So this is what? Operating cash flows before interest and tax. Okay, it's like profit before interest and tax. So you said it's 40 what?
3,000.
43,000. Then we have interest paid, not the interest payable, the actual interest paid. So interest paid, nursing. We had it, we worked it from the interest payable account. Interest payable. Interest payable. You're saying 29,600. Maybe what? No, interest paid. It's an outflow. You all know where I'm picking it from. You all know where I'm picking it from. Hello.
Hello, Prof. Please send us to that page.
Please, we didn't see that, please.
Payable. Don't we have working for interest payable? And didn't we get interest paid under it?
Okay.
The working
Okay. 29.
everything. No. What's the show operating activity? The 29.6 we must hit the operating activity before interest and tax. So interest payable 29.6. When? Have you all seen it?
Yes.
Have you all seen it? Did we have tax paid? Did we have actual tax paid?
Yes.
Yes, before interest and tax into way. So this is the actual tax we paid. So the tax on your P&L is not the tax paid because there may be balances brought for it from the previous year and to carry forward to the next year. You have to adjust them to know the actual paid. And that's what we found. And I gave you a shortcut, right? So this is it. So this is the tax paid 11.5. Meboa. So tax paid working 11 what? 500. We take it out. And this gives us what? The net cash flows from operating activities. You mean you're saying? Is it a loss?
1,900 profit.
1,900 net positive cash flow, right? Good. So now you see in exam, you use a full page for operating activities. Then another page, you do cash flow from what? Investing activities and cash flow from what? Financing activity. Okay. So you say cash flow from what? Investing activities and what? And cash flow from what?
Operating activities.
No, we've done operation. Cash flow from
Right. From financing.
financing activities.
You know, I'm right.
Okay, so then down here, right? Always down here, you are now going to bring your net cash and cash equivalent, right? So your net cash and cash what? Equivalent. That's your net cash flows. Okay, and this workings, you are going to do Babalawo style, right? Because this one will be given to you as the opening and closing cash balance, and the difference is the net cash flow. So what I'm going to do is you are going to get your opening what? Cash and cash equivalent, which is the cash account on the face of the account, right? You know the difference is going to give you. So let's say if this one was what? Let's say 15,000, right? Actually, you have to work this one, okay? Then that's throughout all this statement. You work this one, then you come and add it to the opening, then you come and get the closing. Do you understand? Do you understand? Your net cash flow plus your opening cash and cash equivalent should give us the closing. Please, is everybody listening?
Yes, please.
But the trick is sometimes there's no guarantee that your net cash flow will be correct. So you use hard coding because they'll give you closing. Are you following? And they'll give you opening. And because you know the difference between opening and closing is this figure here. Why would you worry yourself to go and work all and come and get? Even if everything here is not correct, Krana, this one I should get it correct. So I'll find the difference and then I'll put it here as if I solved to come and get it. Do you get it?
Mm.
Do you all get what I said? Do you get what I said?
Yes, Prof.
Once a
Yes,
way
sir.
guarantees that we are correct. Do you get it? Because you might have some errors. But so we pan when you're the wrong party. And if you're rabbit too. So just go and find the difference between the opening balance and the closing balance of the cash on the balance sheet, right? And then that difference, you put it here as your net cash flow into, oh yeah, it's all working and I'll be nyai. But meanwhile, you did hard coding. That's what I'm saying.
Put it in your mouth.
Babalawo method.
Babalawo style.
Hey, this is a serious one. Oh.
Me exam tactician, exam surgeon. The paper is my operating table, right?
Yes.
So the thing is, now that we've done all the workings, it's your banker. We pick, we act, we pick, we act, we point, we kill. Investment in associate is an investment, right? Dividend from associate, investing activity. No be so. How much did we receive? How much did we receive from the associate? Working. 10,000. No be so. Is it not investing activity? Cash inflow or cash outflow? Dividend from associate, cash inflow or cash outflow?
Inflow.
Inflow from associate. Good. Interest received, cash inflow or cash outflow? Investing activity.
Inflow.
Inflow.
So interest received or investment income received, interest received. How much was it? 55,000, right? From our working, 55,000 cash inflow. Good. Additions to PPE, cash inflow or cash outflow? We bought more assets. Purchase of PPE.
Cash
Cash
outflow.
outflow.
Is it an investing activity?
Operating
Yes.
activity.
Yes, sir.
How much was it? Additions to PPE?
25,000.
Outflow, right? Okay, good. Then all these accounts are gone. Goodwill, there's nothing to show, right? We've closed that account. No cash movement on Goodwill, right? Goodwill has no cash movement. Okay. What about tax? We've dealt with it, right? Have we dealt with tax?
Yes. Yes.
Dealt with interest payable? Yes. Have we dealt with stated capital?
Yes.
Yes. No, not yet. Issue of we haven't
Yes.
recorded it. What type of activity?
Financing.
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 Issue of shares. How much? Issue of shares, saying, was it 20,000?
20,000.
Yeah, 20,000. More shares came in, 20. Then retained earnings, dividend paid by the parent. Mebwa. Dividend paid by parent. How much was it? 124,000, right? It's an outflow, Mebwa. Good. Then we had what? NCI, dividend from NCI. Or dividend paid to NCI, 42,000. So we have dividend paid to NCI, 42,000. Okay. From the group. Wapong. That's all. You are done. Done deal. Okay. Now that you know how to get cash flows, let's take an actual question. From your mock.
Finish.
Okay. That cash flow here there. Is it interesting?
Very interesting.
So now,
It looks much easier, current.
yes. So now we are going to spice it up. Let's see. Now that you get the whole process, let's spice it up a little. Your mock question, right? I brought a particular cash flow question. See, like Joe, the more questions, I've been solving them small with you. Let's see. I gave you cash flow inside, Abby. I believe I gave you cash flow. There was cash flow in the more questions. I in a sore truth. So now, let's check and see. Scanners. Yeah. Question number 3. November 2015. Okay. So we can. Hey, this time there we'll be doing long hours. So it is easier. Brandon, there was a muchasu. Because days are drawing nearer. Draw me nearer. Please read and let's go.
The consolidated statement of financial position of Scanners Limited Group as at 31st December 2014 and the comparative for 2013 are shown below. Assets, non-current assets, 2013-2014.
Right. So let's see. Requirements.
Additional information. There were no disposal of PPE in the year depreciation charged in arriving at profit totaled 1.8 million Ghana cedis. 2. Scanners Limited acquired 90% of the ordinary shares of AT Limited on 1st September 2014 for a cash consideration of 460,000 plus the issue of 1 million ordinary share of Scanners, which had a deemed value of 3.6 Ghana cedis per share at the date of acquisition. The fair values of the net asset acquired were as follows. PP 800,000, inventories 2,200, receivables 700, cash and cash equivalents 200, payables negative 500. Scanners Limited made no other purchases or sales of investment in the year. The group policy is to value the net assets.
To NCI according to proportionate share of net assets. It seems it's a typo.
Okay. 3. Finance costs include interest on loans and any gains on held for trading investments or interest due was paid in the year. Required. Prepare the consolidated statement of cash flows for Scanners Limited for the year ended 31st December 2014.
Okay. So now that we've seen this, what's the first thing we need to do?
We open the various accounts.
That's all. See how much a trick. And no. So first of all, we create a cash flow statement itself, right? So what's the name of the group? Scanners Group, right? Are we following? Okay. So we say Scanners Group. Okay. Consolidated statement of what? Please don't say cash flow statement or a statement of cash flows. Cash flow statement, right? Statement of cash flows for the year ended. For the year ended 31st December 2014, right? Okay. So here, what would I put there? Cash flow from what?
Operating.
Cash flows from operating activity. Good. Okay. Then I'll use one whole page in the exam, right? Then somewhere there, down here, I'll say cash flow from what? So the next page, cash flow from investing what? Investing activities. Then somewhere down here, we come and do cash flow from what? Cash flow
Financing activities.
from financing activities, right? Good. Then down here, I'm going to say my net cash and cash equivalent, right? So my net cash and cash equivalents. Okay, usually cash and cash equivalents include what? Include cash. Okay, so on your account, you are going to add cash. If you see any short-term investment, which is like treasury bills, okay, you are going to add them. Then if you see what things like bank overdraft, you are going to subtract to come and get both the opening and the closing. Do you understand? So if you go and they don't give you the cash, mostly for console, they'll give you consolidated cash flow. They'll give you the balances straight like this. Okay, but with normal cash flow, you can see short-term investment, a loan, overdraft. You add all the positives, right? Then the negative, like the overdraft, you take it out, both opening and closing. Then you get the balances, right? Don't worry about that at your level, rarely. So in that case, you see this net cash flow. We have to add it to what? We have to add this net cash flow to what? Our opening. Meboa.
These stats are on sale. Screenshot your favorite.
We have to add this to our opening cash and cash equivalent to come and get what?
The closer.
Listen.
Closing cash and cash what? Equivalent. Good. Usually I do workings for this, but what you can see here is straightforward, right? Let's see something. Closing was what? 2014. It was what? For cash and cash equivalent. Look on the face of the account.
1,400.
1,400.
Right? So 1,400. And opening was what? 4,000.
4,100.
Well, 100.
Box plus 41 gave us 14. What is box? Minus
2,700.
minus 2,700. Into way and was all worky BB and sana we binya way, but when you're straightforward.
Okay.
You should have worked everything. The sum of operating, let me clear this. The sum of operating plus financing plus investing, no, it should give you these 2,4. So cash flow from operating activity plus cash flow from investing activity plus cash flow from what? Financing activity. The net cash flow from all these activities should give you the 2,7. But what's the guarantee that at the end of the day you get all this correct? Why we have to order that? So now that I've done this, now it's Baba workings, right? So just go and get your Baba workings. And then you are good to go. So in that case, what do we see on the face of the account? Quick. There we go. PPE.
PPE.
Balance brought forward.
Balance 15,600.
15,600. Balance carry forward.
16,800.
16,800. And please be leaving ample space, at least about 5-6 lines, right? Because you don't know what will go into it. Okay? Are we okay? Then we add what? Goodwill. No be so. Goodwill. Balance brought forward. How much?
2,400.
2,400. Then balance carry forward.
2,900.
Then what's the next one?
Investment in associates.
Investment in associates. Balance brought forward.
7,800.
7,800. Balance carry forward.
8,000.
Working number 4. What did we have?
You have inventories.
Balance brought forward.
Balance brought forward 12,000.
12,000. Okay. Balance carry forward.
11,600. Accounts payable.
Accounts payable.
Accounts receivable. Sorry.
Balance brought
Accounts receivable. 8,200.
8,200. Balance carry
And 9,400.
Okay. What follows? 6.
Held for trading investments.
Fair value through profit or loss. That's what we call it now, right? So
Okay.
how much?
1,800.
1,800. Then became what?
2,200.
2,200. Okay. Good. Working number 7.
We have
Cash and cash,
equity.
right?
Yeah, cash and A. Cash and cash.
We have already done this, right? But let's do it again. Opening balance was what?
4,1.
4,1. Okay. Closing balance was what?
1,400.
1,400, right? But this one we have already established there was nothing else, so we ended up with 2,700. Okay. As our net.
Yes.
Okay. We have already done this. Working number 8.
Equity attributable to owners of the parent. Ordinary shares. Okay.
Share capital. Balance brought forward is saying?
Okay. 10,000.
10,000. Balance carry forward is saying?
14,800.
14,800. Good. Okay. What's the next?
Capital surplus.
9, right? Capital what?
Surplus.
Capital surplus. Balance brought forward is saying?
400.
Okay. Balance carry forward.
400. Retained earnings.
Retained earnings is saying?
6,300.
No, you don't
Carry
answer
down.
me.
7,300.
Sometimes you answer this.
If somebody's
Yes,
background is giving feedback or
Yeah.
NCI.
Everybody's fine.
The balance
Yeah,
carry down is
so
7,300.
okay. No, I'm coming. Let me slide this. Freezing. Please hold on. Computer is freezing now. It's tired. Okay. So retain earnings. Balance carry forward now is saying
Balance carry down 7,300.
7,000.
Carry forward 7,300.
Okay. Then
NCI.
non-controlling interest, you understand. So let me just put NCI. Balance brought forward.
6,100.
6,100. Balance carry forward.
65. Long-term loans.
So number 12. Long
Yes.
loans. Balance brought forward. How much is it?
18,000.
Balance carry forward.
14,000.
14,000. Okay, so good.
So, Prof, so with this all workings, are you going to get marks for it, or they are not parts?
But people don't know that they market. That's the difference between those who have marked and those who haven't marked. They just pick any method and then they're applying from ACCA books. And then their students go and then you don't make it.
Wow. Okay, accounts payable.
Payables. Yeah.
10,200.
Balance brought forward 10,200.
And 8,700.
8,700. Okay.
Income tax.
Income tax, right? So that's 14. Income
900.
balance brought forward
900.
900. Balance carried down
600.
600. So now I believe that's the last account, right? It's a lot of work, but this will save you a lot of work as well. So now, is there anything on the P&L that relates to each of these accounts in some way? So revenue, cost of sales, distribution cost, finance cost, share of associate profit. Do we have associate account in our question?
Yes.
Here is this, right? So in the P&L, share of associate profit was what? 500. No, Bizo? Good. Income tax. Do we have income tax in there? We saw it, right?
Yeah, sure. Yeah.
So income tax, where are you? Income tax, where are you?
Down there.
So P&L, how much?
Income tax 600.
Okay. Then we had what? What else did we have? Finance cost, right? But we don't have, they said the finance cost due was paid during the year. Into finance cost, we can just create an account, finance cost, which is interest payable. Interest payable. Since it doesn't, anything that you don't see anything on the balance sheet, that means opening balance is 0. Closing balance is also what? 0. Okay, so if you don't see any account on the balance sheet, that means opening is 0, closing is 0. But the P&L, how much was there?
450.
450, right? Okay, so I leave it there like this. Okay, so now we are filled in, but we are not done. Attributable to owners of the,
Bonus.
how much was it?
1,200.
1,002. Which account does it go to? Profit for the year for the parent. Which account? Profit of parent. Which account?
Routine earnings.
Retained earnings.
Retained.
In that case, I say P&L, how much? 1,002, right? That's the part. No, be so. That belongs to the parent. The rest of the part belongs to what? NCI, right? So P&L,
Yeah.
how much
190.
of the part attributable? That's 190. Goes in here. Good. All right. So now you've laid out everything. Now that you've laid out everything, what do? Footnotes. I take footnote 1. There were no disposals of PPE and equipment in the year. So since there were no disposals, we know that every PPE calculation that we are going to do will result in an addition. Meboa. No be so?
Yes.
Then they said depreciation charge in arriving at profit totaled what? 118. Meboa. Good.
800. Yeah.
So depreciation affects 2 accounts. Everything in the footnote, 2 accounts. First, depreciation must affect our PPE account. True or false? Must
True.
reduce by how much? 1.8. But since
Right.
it's a P&L item, it would have been charged in the P&L, right? As an expense. So what do? We reverse it. True or false? True or false?
True.
We take our profit before tax as usual, which was 13 what? 90. Then we reverse the depreciation. So we add back what? Non-cash items. No be so?
Yeah.
So non-cash items, what did we have? Depreciation 1,800. So maybe I can create this other one here. And then I sum them there. And then I bring it to the side, right? So you see how we dealt with that footnote, straightforward. And he said what? There were no disposals of PP in the year. That means that was all, right? Good. So we move. We come here and it says scanners during the year, scanners acquired what? 90% of what? 80 on 1st September 2014. That means there was an acquisition. And that means that because we are accounting for at the end of the year, that means these subsidiaries figures are already part of the figures we calculated. Do you get it? Do you all follow? Don't worry
No.
about you see an acquisition. Said during the year, we are accounting for at 31st December. T. Are we not preparing account at 31st December?
Yes.
And on 1st September, you acquired a subsidiary. That means you have already consolidated this consolidated financial statement. Consolidated statement of financial position. So is that subsidiary that's already in this?
Yes, please.
That means most of the subsidiary in the figures if opening balance the subsidiary in the figures we will consolidate it. Do you understand? It's not difficult. See how I do it. So we start doing workings for new subsidiary. That's how I do mine. So I say what? Workings for what? Workings for what? New sub. So new sub, no, we acquired what percentage? Scanners acquired what?
90.
90% of AT Limited. So I do a new. So scanners was saying
90%.
that means NCI was saying 10%, right? Okay. Here, date of acquisition is not important because it's already in the group account. Do you understand? Good. Now they said he paid cash consideration of how much?
460.
Okay, so this one was our working one group structure. My working will still not change. Group structure. Thank you. Then my working two, I'll have what? What's our working two?
Cost of investment.
See what?
Cost of investment, Yes, you are saying first.
The cash consideration is 460.
Okay, TABB. Cash. How much was it?
460.
Okay.
Plus the issue of 1 million ordinary shares.
Okay. Plus what? Share exchange. Of how much?
1 million shares, deemed value of 3.6 per share.
So 1 million shares at what? 3.6? No,
6.
Which is 3,600.
3,600. Yeah.
This one is a debit to cost of investment, which we see here. And then the credit goes to what? Share capital. No, be so.
So.
Is that not what we learned? Is that not what we learned?
Yeah.
Okay. Please, I only got the same one person's response. Is that not what we learned from share exchange?
Yes, sir.
Okay.
Yes, sir.
We issue 1,000 shares at 3.6, making 3,600. So we must debit cost of investment. And in here, what is the credit going to? Share capital. Do we have share capital account here? Do we have?
Yes.
Yes. So we say what? Acquisition of subsidiary. How much came? 3,600. We go and add it. And one no. Does it? Okay. You see why I open all the accounts? Another student and cafe no share capital, no be working, which will waste time. Okay. Now, TABB, this cash that we paid for the subsidiary, the cost of investment, is there no cash coming in? Is there no a cash outflow?
Yeah.
It is a cash outflow, Meboa.
Outflow.
Yeah. So is it an investment or a financing or operating activity?
Investing.
Investing, cost of investment. Thank you. But wako makola koto jeans 460. But to share jeans ni muno nipa no na 200 cedis eshim. Did you actually buy the jeans at 460 or you bought it at 260?
260. 260.
You bought the subsidiary for 460, but he actually carried cash in his net assets. So that cash is like I paid 460, but I ended up getting 200 in return. So you must net it off. Does it make sense? We call it net investment in the subsidiary. Did it make sense?
Sure.
I bought you 460. I came home. By the time I was come to wash the jeans, I realized that 200 cedis were at the back of the jeans. Is it not a gain that I got? So in effect, how much did I actually pay for the jeans? Is it 460 or 260?
260.
260.
So when you buy a subsidiary and the subsidiary already had cash, that cash should be taken from the cash consideration you paid so that you have a net cash. Does it make sense? Does it make sense? It's pure sense, right?
Yeah.
Force the $100 so. Yes.
Okay. Oh, they will only see this, so maybe almost see no murefi.
Even now, Prof say any force or Ghana.
Okay, Mr. Okoto,
I got $30 and pounds.
bill no musi. Obu a ni
Yeah.
no ani jeans ni refi. Not this kind of shit. Anyway, it's just the illustration. I hope it made sense.
Yes, it does.
In that case, cash flow from investing activity, we are going to say net investment in what?
In sub.
Net investment in subsidiary. Then this will be what? 460 minus what? The 200 cash that the subsidiary brought, right? And that gives us what? 260. Is it cash outflow or cash inflow?
Outflow.
Outflow, because we paid for the subsidiary. Does it make sense? The same way when you are disposing of the subsidiary, the disposal proceeds becomes what? A cash
Inflow.
flow. Makes sense. So that is all. So 260 outflow. Good. Okay. So now we got cost of investment, cash, and what? Share exchange. Was there any other things? No. Finished. So that means that what? The cost of investment, you're saying? Cost of investment there is saying? Okabo Mwa.
Or
When
5,000. 460.
40.
4060.
Okay. That's the cost of investment. Good. But after cost of investment, we need net asset at acquisition. Meboa.
Yes, please.
And reporting date. But here we've already consolidated. So the net asset we acquired. And they are telling us that the net asset we acquired totaled what? It totaled how much?
Net asset acquired 3,400.
Okay.
3,000. Yeah.
Nipa na yeto no. When he was coming, he brought PPE of how much?
800.
This 800, what do we do to it on normal consolidation? Don't we consolidate
Yeah.
Yeah.
it to PPE? So go to PPE account and say what? Acquisition of subsidiary or the same never
800.
800. Then biom na kwane de buy. Then biom na de buy inventories.
Receive inventory.
Acquisition of subsidiary or the same never 700. Oh no, 2,200, right?
2,200.
Are you all following? So you are consolidation. You are consolidating. You are adding up. Cash and cash equivalent, we've dealt with it, right? Payables. Where's our payable account? So we already have a payable of 10.2. Then we acquired a subsidiary who brought additional payable of how much? 500. No, Bizo.
Payable is 500.
Okay. Don't say that this is negative, so you negative it. You negate it. No. Payable is already a liability. That's why it's a negative, right? So when you come here, it's still a liability. Makes sense. So you add. Okay. These were the only things that subsidiary brought, right? And they said,
Receivables.
oh, we've not done receivable. Receivable was the 700. Have we not done? Okay. So acquisition of subsidiary, how much? 700. Okay. Good.
700.
So that was it. But then we have gotten the net asset at acquisition. Good. Now, our working for, what do we get? Our working for, what do we normally get?
Goodwill.
So goodwill, we get cost of investment was how much? Cost of investment in your saying? On the
4060.
46.
60.
You all follow? And then fair value of NCI at acquisition. The question said we should use what? We should they said use proportionate share, right? So it means
a question of type of error. So.
This is 90%. So NCI will be 10% of the net asset, which was 3,400. So NCI will be what? This is new NCI. 3 what? 340. True or false? That is the net asset. So NCI will get 10% of the net asset.
Yes.
Is it not new NCI from a new subsidiary?
Yep.
We have
It
NCI
is.
account. Do we have an NCI account in the question?
Yes, please. Yes, sir.
NCI, you go to Baba NCI, then you say acquisition of subsidiary. How much? 340.
I'm coming.
That makes sense. Okay. Now, goodwill. We have this as our total consideration. How much is the total consideration?
Total consideration.
That will be
440. 4,400.
4,400.
4,400. Then we less the fair value of our net asset at acquisition. Now you're saying net
3,400.
3,400. It means goodwill on acquisition. You're saying
100,000.
Goodwill on acquisition of who? 80. Mebwa. Goodwill on acquisition of 80 was what? 1,000. Not so. Now this 1,000 came. This is a goodwill on a new subsidiary acquired during the year. Mebwa. Do we have goodwill account? Do we have goodwill account? Yes, we do. Of subsidiary. He brought additional what? 1,000 goodwill. These background noises is distracting the class. So acquisition of subsidiary plus 1,000. I was saying me plus Nifi. Yes, sir. It will look like 11,000. Makes sense? So we try next note. You see how we do it. You see, it's not difficult. Anything you see, just if there's an account belonging to that name, just send it to that account. Right? So that was it. Now, what else did they say? Finance costs include interest on loans and any gains on held for trading investment. And they said all interest due was paid in the year. Okay. So this is what they are saying. Where's the interest payable account? They are saying that this finance cost, are you following? This 450, it included what? This 450 included what? Oh, please read for me. They said finance cost include interest on loans and any gains on the held for trading investment. So this 450 that we see there included what and what?
Interest on loan and gain on investment.
The held for trading investment, which is the fair value through profit or loss. Okay. So the gain on investment here, the opening balance was what? Is it not 1,008?
Gain on investment.
The opening balance, is it not 1,008? Held for trading investment is the same as fair value through profit or loss. We call it held for trading. Okay. Because you are holding it for the short term.
It's 1,008.
1,800.
Then closing was what?
2,200.
So what's the fair value gain?
400.
400.
It's 400. Look at what they are saying. They are saying that included in this 450, okay, was that 400. It is that 400. Normal fee interest nimu. No mubenya saying 450 way because interest is an expense, right? So they took the expense and then they less the gain, and that came to give us this 450 that we see here. I don't expect you to be able to do everything, but at least understand. Do you understand? So 450 way say expense, interest expense na one. Yati gain of 400 if more. How do we then get the total interest paid? What becomes the total interest paid?
We add back the 400 to it.
Yes, so the fair value gain of the 400 must be added back, and that means that this one is what? They should have given us what? 850, right? That means our interest paid should actually be what? 850. There's the actual interest paid for the year. Are we okay? So, with that being said, we close off all the accounts. PPE, close. When we add everything up, what do we get for PPE? So 15,600 minus 18 plus 800, that gives us 14,600. Okay. Compared to 16,8, PPE should have been this, but it grew to 16,8. Is it addition or disposal?
Addition.
Addition. So 14,600 minus 16,8. That means we invested additional 2,200 in PPE. Which account? Investing, financing, or operating?
Investing.
So additions or purchase of PPE, right? So additions to PPE, we bought more PPE. How much? 2,200 cash outflow. Good. Goodwill. Goodwill should have been what? 3,400, but it became 2,900. What reduces goodwill?
Impairment.
Impairment loss, right? How much is the impairment? 34 minus 29. Impairment is saying 500. Mebwa. Now, is impairment not an expense?
Yes.
So which part? Operating. Mebwa. Impairment
Yes,
is
please.
cash item. So we come here and say goodwill impairment loss. How much? 500. So we add it back. We are done. Investment in associates. 7,800 plus 500. 7,800 plus 500. That's 8,300. That's what it should have been. The account should have been 83, but reduced to 800. That means we received dividend from associates. Mebwa. How much? 300. No be so. No be so. Investing activity. Do you all get it?
Yeah.
So dividend from associate. Now it's saying 300 is income. Good. That account is gone. Inventories. 12,000 plus 22. Now it's saying
14,200.
okay. In the inventory, now 14,2. By the end of the year, your inventory reduced to 11,600. Say goods are waton a sotia. Say just a waton.
Yes.
So if you
So
sell goods, is it outflow or inflow of cash?
Inflow.
inflow of cash.
This one inventory reduced, right? So it's a decrease in what? In inventory, but then it's what? An inflow. It means I sold these goods. And that is how much? So 14,200 minus 11,600. That's 2,600. Okay, so 26. Come here and say what? It's also what? Working capital adjustment. We add it to this one. So I'll just say increase was a decrease in inventory, right? So somewhere down here, I'll just say decrease in inventory, which is a cash what? Inflow by what? 2,600. Good. Then receivables, it was A2. We bought a new subsidiary for 700, 89. We compared to the 94. So this should have been 89. We compared to the 94. That was what? 500, right? Okay. So
500.
customers were owing you 89, but now they are owing you 94. It's their monies they are owing you have increased. So more of your money is with them, right? So is it cash outflow or cash inflow? If more of your
Cash out,
people, is it cash inflow or cash outflow?
outflow.
Outflow, because if receivables increase, it means it's taking time for you to get your money back, right? Your money is with people for a long time. Makes sense?
Sure.
So in that case, this is what? No, why is this behaving like this? So it means this is what?
An outflow.
An outflow. So increase in what? In receivable.
Inventory. Receivables.
500, right? Outflow. Thank you. Okay, so that account is gone. Fair value through profit and loss is gone. Cash is gone. Share capital. Thank you. We're having 10,000. We issued 10,000, then 3,600 came in. It means our share capital should have been 13,600, but it became 14,800. What happened? It means did cash come in? Yes, we issued more shares. True or false? That means it's due to issue of shares. Is it cash in or cash out?
Cash in.
Cash in. By how much? 1,200. Yeah. 1,200 cash came in. Thank you. So issue of shares, that's financing activity, right? So straightforward. Come down here and say what? Issue of new shares. Issue of new shares. That's what 1,200 cash coming in. Good. So share capital, the account is closed. Capital surplus, there was no movement on the account, was there? Hey, the fair value gain, we didn't reverse it. You know, fair value gain, it was already in here. Why is it? The fair value gain was already in here. So in that case, if we want to reverse it, we can what? Just bring the finance cost we saw on the face of the account, right? That 450. If we bring that 450, it means that we have reversed it. What does it mean? This means that you have literally added back the finance cost of what? 850, okay? And then you are lessing the financial gain of what? 400, right? So the net effect is the 400 that we are seeing here. The 450 that was already in the account. They had already done this deduction. Do you guys remember? Do you guys remember?
Yes, Prof.
So if I add back the 450 that I saw on the P&L, okay, it means that this finance cost of 450, if I add it back, it means I'm reversing this. Somewhat else here. Because this one is not the real interest paid. We need a real interest paid, which we have already calculated as 850. So this is what we are reversing. Make sense? Make sense?
Prof,
Yes, please.
please, my line is breaking. Can you take the finance cost again from my bag?
But they told you that the finance cost is a net of the financial gain. Meboa. So if we want to reverse this 450, it means that add back the 850 less the 400. Is that not so?
Yes.
Yes, and that's what we are doing. So if you put the 450 that you saw in the account there, that means you are reversing it. But we can equally treat it separately. We say what? Fair value gain. Because in the P&L, it would have been what? Fair value gain to P&L, it would have been what? Added, we reverse it, right? It was what? 400, we reverse it. Then the finance cost. The actual finance cost was what? 850. Do you guys remember? We added back. Because it would have been less, we added back. Because this one would have been added, we less it. So we are reversing the effect of, they are all non-cash items. Remember? You get it? So this account.
Yes, please. I'm okay.
Yes. Capital surplus movement was nil, right? There was no movement of capital surplus. Retained earnings, it was 6,300 plus 1,002. Retained earnings became what? 7,500, right? By the end of the year, reduced to 7,300. Did we receive dividends? Did we pay dividends? Yes. How much? 200. True or false? True or false?
True.
So that means we have dividends, what? Dividends paid. No be so, by parent. Dividends paid to owners of parent. 200, right? Outflow. No be so. Okay. That account too is gone. NCI. NCI was 6,100. P&L profits came and added up. Then we acquired a new subsidiary that came with NCI. So NCI should have been how much? 6,100 plus 190 plus 340. Should have given us 6,630, but it reduced to 6,500. So did we pay dividends to NCI? Did we? Yes, we did. So 6,630 minus 6,500. Yeah, I've made a mistake. Oh. So we paid dividend of 130 to NCI. So dividends to NCI, 130 outflow from the group. Long-term loan, there was nothing, right? We owed loan of 18,000 and it increased to 18,000, decreased to 14,000. So a decrease in loan means we repaid the loan. True or false? Repayment.
Yeah, loan repayment.
So loan repayment, how much? 4,000. No be so. Okay. So in that case,
Outflow.
loan repayment. How much?
4,000.
Outflow. Okay. What account have we not closed? Payable. It should have been 10.2. Then we bought a subsidiary 500. Should have been 10.7, but reduced to 8.7. That means we have what? Decrease in payable. If your supplier's balance decrease, does it mean is there a cash outflow or cash inflow? Your
Cash outflow.
Outflow.
outflow, it means you paid them their balance, right?
Okay.
I paid them how much? 2,000. No be so. I was owing them 10.7. Now I owe them 8.7. I just say me away. No be so. True or false?
True.
Yeah.
Paid off my suppliers, so that means what? That is what? A decrease in what? In payables. And that was also a cash what? Outflow 2,000. I paid them off. Okay. What account have we not closed off? Income tax. We're owing tax of 900. Then the one due for the year 600. That means we should have owed tax of 1,005. By the end of the year, we are still owing 600. That means we pay tax of how much? 900 again. No be so. So at the end of the day, when we put down this one, we get the operating activities before interest and tax. Then somewhere, we already know the interest that was actually paid for the year, right? So you can come here and say what? Interest paid. The interest paid was what? We paid 850. Okay. Then we have tax paid. The tax paid, we just worked it out for what? 900. No, be so.
900.
Okay. So now, was there any other account we haven't closed yet? We've closed all the accounts, right? So that means we are done. So 18 plus 500 plus minus 400 plus 850 plus 26 minus 500 minus 2,000. That's 2,850. Okay, plus 1,390. That gives us 4,250. And these are what? Operating cash flows before interest and tax. So we take out our interest paid, we take out our tax paid, and then we end up with net cash flows from operating activity. Next, I'm write it in full. So we have 42. Oh, I wrote 4240. 4250 is 4240. 4240. Okay, minus 850 minus 900. That's 2490. 2490. Okay. So that is net cash flow from operating activity. Let's call this A. Then we have net cash flow from investing activity. Net investment in subsidiary, addition to PP, dividend from associate. Were these the only investing activities? Were these the only investing
Yes.
activities? Net cash flow from investing activities. Let's call this B.
Or 845. So it will be 45.
So 2160, right? Okay. 2160 adverse. Or are we on point? Then we come here. So that one, did we call it B? Yes. Then we come here. New shares 1,002 minus 200 minus 130 minus 4,000. We end up with what? Minus 3,130. Okay. And there's a net cash flow
Oh,
from
please, the for the investing, how much they get?
230 or so.
It's supposed to be 4-5 or
Why?
I don't-
Addition to PP negative.
I thought it was 2,600. Sorry, the first one.
So 2160. So this net cash flow, no, it's like you are getting what? 2490 plus minus 2160 plus minus 3130. Okay. Do we get 27?
So,
2,800.
We forgot some 100 somewhere. It doesn't really matter.
Prof,
Yes, boss.
I'm getting 2,800.
And I'm also getting 2 and 28. There's some 100 somewhere we forgot. We forgot some 100 somewhere. It happens. But does it make sense? That's why I said mostly there's no guarantee you are going to get this one. But it's a typo. We forgot something somewhere. I know. It's possibly maybe one of our balances. Maybe we ignored some 100B. You get it? Very 130. So where did we forget something? But does it make sense? Does it make sense?
yes.
The cash flow heading and cash flow heading.
With your method, there, you made it simple.
We forgot. I don't know what we literally forgot. It's like we have forgotten the. Don't know. Maybe it's one of the balances. You gave me maybe
Hello,
something six.
hello, Prof.
Yes, boss.
Prof, let's see the receivables balance.
Receivables balance.
Minus 9,400. Okay, that's 500. Okay.
Don't try making it correct. Under pressure, anything can be wrong. Maybe figure you bought 2.6, no, I could bought 2.5. Do you understand? It happens.
Let's look at the operating activities.
Please don't try balancing it. The operating activity is correct. It's the understanding. Every question will be different. In Tiasiano, when you have time, you can solve it. Because you know the thing you are even trying to struggle for, Nakra, you've gotten it. You've gotten it through the papa way. Anamebwa. Or this 2.7, this one I was just cross-checking. It means we are where we and 1 year. So there's no need to add up to. I was just trying to prove to you why this, right? We add all of them to come and get this 2.7. But this 2.7, I've already gotten it for you, have I not? We know that the sum of all would give us 2.7. Have we not concluded on that? So why should we find if something is not balanced? Because the only thing is for them to get individual things in the various categories of cash flows. The sum of everything gives us this 2.7, which we've gotten the 2.7. Or Anayenya Babalao method, we didn't get.
We had it.
We had it. So why are you trying to prove?
Oh, Prof, I just want to see something.
It is correct. I see. Don't worry yourself. When you are when you man how we crap when you're 19 and a half. So what do you want to prove? Again,
Oh,
you want to get 20 flat.
Never there.
Please, I've told you over and over again. Your duty is not ever. Your duty is minimal. Nah. It will shock you. It will shock you. So bit me akona cash flow asamba biem. Because cash flow came in a long time. Bit me abasa obe konna ya to cash flow biem. Obe anything.
Yeah, Bomodia.
Yeah, no baby says everybody. No, just as a student, your job is to prepare. Right? Just prepare. Minimana, not a beba. That's how I see a student. Oh, say wait there by last night. Are you the examiner? You are not the one to tell whether it should come or it shouldn't come.
Yeah, Bomodia flat.
Why no? That's all. Minimana, that's all. Not a beba na. You are asking the wrong questions. Hello. Are we okay?
Yes, sir. Mutias here. Debbie.
Okay. Think. Mm, 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 mm.
Ọfọ bẹyẹ nu otwi mu ama ẹ.
The profit before tax. That's where a problem came. But don't worry about it. You see, instead of I made a mistake.
It's supposed to be 1790.
It's 1990. So how about 1790? That means you're on the same page. Oh. Make up 1390 instead of 1990. So this should have been 1990. 1990. So if 1990 plus 2850, even you're saying 1990 plus 2850. Since you always want something to balance, please don't go and do that in exam.
4840.
Please don't go and do that in exam. I beg you. Don't go and cross-check baby, sir. You don't have time. There are other questions waiting. T4840. Mete my 850 minus my 900 fee. I mean, saying 3090. Mewa
3090. Yeah.
30.
Minus 2160.
3090
2160.
2160 minus 3130.
2200.
Why 2200? As how quick review. Why 2200 now? We forgot something. Oh, we forgot something. Who can remind me what we forgot? We forgot something. Oh, forgot something.
Share of associate profit.
Thank you. We
Did we
forgot.
tackle it?
It's supposed to come here. It's you. Under pressure, anything can happen. Share of associates profits. When you're saying we must add it back, right? 500. It's right in front of us. Should have added it back. So 2850 plus 500. Hey, minus 500 rather.
But Prof, isn't we did it there, and we had a balance of 300 as dividend.
And that one was the dividend from associate. But this is the reversal. This is not a cash item. It's just a share of profit. We want the actual cash.
Okay.
So you see all these things had a cash.
Okay.
So we reverse them. You get. So that means this one should give us 2. I believe this one should give us 2. Is it 2350? 2350 plus 1990. That's 4340. 4340. So 4340 minus 850. You see how this thing can be frustrating, right? So in exam, don't try balancing it off. That's why I showed you the miogo way, right? Of doing this thing. So now try and see if it will balance. 2590 minus 3130 minus 2160. Oh, you are? Pam. 27. Now, why would you stress just to come and get 27 when this thing you've already gotten 19? I don't even know. You know what we did under exam, you would have gotten it. It's just that we forgot, right? So in the P&L, once you take this, all these things, see, all these things that came before the profit before tax, like this one, those are the first things that you reverse, okay, before you come and look at the other ones in the question. So if I take this 1990, this 500, 450 is the first things I reverse, okay, before I come and look at the depreciation and other things. So I will never get it wrong. But this one, I just went by taking the other ones first. Okay.